Good day, my SS1 students out there. I'm going to take you on a subject, financial accounting. And the topic for today is Introduction to Accounting and Bookkeeping. My name is Mrs. Anyunku Rejoice. Now, what we are going to look at in this topic is the definition of accounting and bookkeeping. First of all, what is accounting? Accounting is the art of recording, classifying, selecting, measuring, interpreting, and communicating financial data of an organization in order to enable users to make decisions. Now, we can take this definition with this little acronym RCXMIC. You can call it RISMIC. With this, you can define your accounting very easily. R stands for recording, while C stands for classifying, S stands for selecting, M stands for measuring, I stands for interpreting, and C stands for communicating. So, accounting is the art of recording, classifying, selecting, measuring, interpreting, and communicating financial data of an organization to enable users to make decisions. Now, what is bookkeeping? Bookkeeping is the art of recording and classifying financial transactions of an organization in a systematic manner. Now, if we look at these two, you can see similarity between the accounting and bookkeeping, that is recording and classifying. But all the same, they are not the same. Accounting is different from bookkeeping. That will take us to a subtopic, the difference between accounting and bookkeeping. Now, in bookkeeping, records are classified. Financial data are classified and recorded just like that. But while accounting, we record, we classify, we analyze, we interpret, and then communicate that financial data to the organization. That's the difference. Now, another difference is this. Bookkeeping is only used for day-to-day financial decision, while accounting is used for a medium and long-term financial decision. Bookkeeping records are kept for internal use, while accounting records are kept for both internal and external use. To be a bookkeeper doesn't take time. You can be a proficient bookkeeper in few weeks or months, but to be an accountant, it requires years of experience and studies. Now, bookkeeping is done by junior staff because bookkeeping is simple in nature and limited in scope, while accounting is done by senior staff because it is not simple in nature and accounting is wider in scope. Now, you can see and believe with me that there is quite difference between accounting and bookkeeping. Now, that will take us to another subtopic, reasons for keeping accounting records in an organization. I repeat, reasons for keeping accounting record in an organization. The reason for keeping accounting record in an organization is this. One, it provides a written record for proper conduct of the organization. A business will do well if their past transaction or daily transaction is recorded. Based on that, the management can conduct the business well. Now, Accounting also helps the management in accounting records helps the management in making what? Decision. Based on a written record of what they have in the organization, management will now use it to make what? To make their decision. Now, accounting record also help in planning purposes. It helps the organization in their budgeting. Accounting record also helps to know the profit and loss made in that organization. Accounting record also help us to determine our creditors and debtors balance. Now, some of you may be wondering who is a debtor and who is a creditor. Yes, a debtor is the one owing us. They are our customers. While our creditors are our suppliers, they are the ones who the organization is owing. That is creditor, debtor, customer, creditor, supplier. Now, accounting record also help us to know the value of our stock at the end of accounting periods. At the end of the year, the organization will use accounting record to know the stock that is what? That is available in the organization at close. With accounting, we can also value our depreciation of assets that we have in what? In our organization. So it helps us to value our assets, to know the assets that we have, those that are depreciating and those that we have to keep. That is the usefulness of what? Keeping accounting record in an organization. Now, this accounting record also have what? Limitation. That is the disadvantage. Accounting has disadvantage, limitation, in the sense that its record is historical in nature. That is to say, accounting record is based on past transaction, past events, not present events, but on past events. Anything that cannot be quantified in monetary terms will never be recorded what? By accounting. So, accounting only records in monetary terms. These are the limitations of what? Of accounting. And this accounting also is limited by personal judgment, objectivity. It is limited by personal judgment. Anybody can interpret it any way they want. That is limitation in what? In personal judgment. Also, this accounting also followed the rigidly unrealistic accounting concept and convention. Some of you may be asking, what is concept? Concept is assumption. Assumption, accounting assumes. It assumes, it's not a reality. So with this, we can say that accounting has what? So many limitations in it, but it also helps us in what? In our business organization, for us to know what to do in our business organization. All right, that's come to an end of the class. But before that, my assignment has been given to you through my WhatsApp. You can forward your question, whatever you have observed, your questions, forward it to my WhatsApp number. So see you next class.